A very common challenge that I see with business owners when it comes to cash flow management is that they don't directly tie their personal cash flow requirements with the cash flow requirements in their business. As a result, it kind of leads to not having a lot of clarity in terms of what should be focused on in the business at any given time. So if you think of your business as a vehicle to get you to your personal goals, then understanding what your personal goals are and the cash flow requirements to meet those personal goals, what those are, then you will know what your cash flow requirements will be for your business, so what your business needs to do in order to feed your personal goals. Okay, now if you have multiple shareholders in the company, then you need to think about that in terms of a group, right? What the collective personal goals are for shareholders. And then everything else that happens in the business is going to have to be planned out in order to meet that, right? Including things like, paying for employees and paying for supplies, and all those other very important things in your business. So, if you would like to hop into a tool to understand how that works for you and your business, then stick around and I'll walk through that for you here. Hi, and welcome to this video walkthrough of our tool that we put together, which helps connect your personal goals with your business performance goals. And so I'm just gonna minimize my head here and just move me to the corner so I'm out of the way. Just by quick introduction, my name is Josh. I'm the principal here at BasePoint CPA, and so I'll just be walking through this for you. So just as a quick step back, okay, the purpose of this tool is to help you identify what your personal goals are, because once you've done that, it will help you establish what the cost of that would be, okay? Because every time you want to do something as an individual, there's oftentimes going to be some kind of cash outflow required for that. And so as a business owner, when you have cash flow requirements for yourself, for your personal goals, that translates into cash flow requirements coming from your business. The big take-home message often in this kind of exercise, especially as we work through, because just as a quick note, this is a condensed version of what we actually work through with our CFO clients. We kind of get into it a little bit deeper, but I thought it would make something a little bit more accessible for everyday business owners that can't necessarily get a fractional CFO walking alongside them in their business, okay? So when you line up all of your personal goals, which I'll go through a sample here with you shortly. Once you've done that, you can kind of tag a bit of a price to each of those things, right? Cash flow requirement. Again, that creates a cash flow requirement coming from your business, because ultimately the take-home message here really is your business should be the vehicle that gets you from here to here in terms of your personal goals, right? You can have personal goals. You want to get to a certain destination. Your business should be the vehicle that gets you there, okay? Very, very important to think about it in that way. Because once you can establish that and you know what the cash flow requirements are in your business to reach your personal goals, then you know specifically what you need to be doing in your business, okay? And so what this tool does is it goes through just that, okay? It goes through exactly that, outlines how to do that so you can see how that translates into very specific objectives and targets in your business. So let's dive in. I'm going to start with the My Goals tab. Okay, there's 3 tabs on the sheet here. There's a summary, there's a My Goals, and there's a non-business income. I'll introduce each of them. Very tempted to click on the summary right off the bat, but you'll get distracted with all the stuff that's on there. Okay, so let's work through this, in orderly fashion here. There's a sample name up here. That's because this came out again of our larger CFO workbook that we do. We actually have multiple tabs for multiple individuals, because quite often larger companies have multiple shareholders or owners, right, who have their own sets of goals. And so we take all that into account, okay? So not critical to put your name there, but if you want to, go ahead or just leave it as sample name. Personal goals we have broken into 5 different categories here, okay? We've got faith, fulfillment, or fellowship. Okay, so this is like the communities that you're involved in, the things that are very important to you at a high level, okay? So quite often, like, your faith is going to be whatever that is, right? The big things that are important to you in your life, because that ends up translating into, where you contribute finances to, right? If you make donations, where you volunteer your time, what you do in terms of your own personal development. Okay, so that's the first category. Second category is family. Okay, so what you want your family life to look like in terms of activities, vacations with your family, if you need childcare support, taking care of your family in terms of clothing, etc. Then we have fitness. Okay, so fitness isn't just physical, but also mental. Okay, so you want to think about your mental and your physical fitness, what types of goals you might have in that area, and the associated costs there. Fun and lifestyle, this is going to be often where the lion's share of your personal budget is going to be situated, right? And then we've got finance. This is going to be some of your overall financial goals. Okay, so let's look at some samples here. This is just sample data. It's not taken from anybody in particular, but let's just say sample name here decides that in a given year, and this is annual. Okay, these are annual amounts. Wants to make donations of about $5,000 a year. They want to make some community contributions of different types that might amount to about $1,000 a year. And then throughout the course of the year, they may want to do some training, maybe some retreats or something. That might amount to about $1,200 for the year. So total amount would be $7,200 there. Then we look at family. Okay, so in this example, looking at birthdays, different holiday events, family outings, etc. Maybe about $1,500, right? Maybe you want to go to the zoo, whatever it might be. I was going to say Disneyland, but that might fall under this. Children's educations and activities, so maybe sports that they might get involved in. Maybe you have a couple kids who are playing hockey. My kids don't play hockey. Well, they play ball hockey. They don't play ice hockey. I think if they did, this number might actually be a little bit higher. Family vacations, right? Maybe you've got a plan once a year to go somewhere nice, so maybe about $8,000 that you want to squirrel away for that. And then in terms of family clothing, maybe you're looking about $2,000 for the year for that. Okay, so about $12,500 for the year. Then fitness, right? So maybe you've got a gym membership. I always say be careful about the set and forget expenses, right? Gym memberships can be one of those if you're not utilizing them. So get the memberships. One of those things, if you don't pay attention. So it's not bad to pay for a gym membership. Just make sure you go, okay? And then sports and recreation, okay? Maybe there's a league that you want to get involved in yourself, not just like as a family thing, but as maybe something you want to get involved in. Maybe it's like, a number of rounds of golf, whatever it might be. And then some personal care, maybe $500 for haircuts over the course of the year. Try to keep it trim, right? So let's move on to fun and lifestyle. So again, this is going to be typically the lion's share of your cash flow requirements. Now, when we're looking at some of these things, I just want to say, because I've got $36K sitting here for rent or mortgage, it's going to be high, right? It's about $3,000 a month. Now, that might be because maybe you came into the market at like a tough time and you've just got really high mortgage payments, or maybe it is that you want to live somewhere else, okay? So the beauty of doing an exercise like this is not just to necessarily aim to, pay your mortgage or pay your rent and pay your ongoing expenses, but think through what you want your life to look like, okay? Because when you think through what you want your life to look like and then create the budget for that, the cash flow requirement for it, it then creates the cash flow requirement for your business. You become very motivated to make that happen, right? Because you're like, hey, if we can make this happen in the business, we can get there, okay? So this $36,000 a month, or a year rather, maybe it's a combination of your current living conditions, and maybe you want to have a secondary property that you want to be able to go to on the lake occasionally, right? So maybe that will bump up your total rent or mortgage amount. Utilities, maybe about $3K. For the year, if you're looking at, say, like $250 a month or something. Groceries, maybe at $2,500 a month, looking at over 12 months, about $3,000. Your vehicle, this would be if you maybe had car payments or vehicle payments of about $750 a month for the year, that'd be $9,000. And then your fuel, if you're paying roughly $450 a month, for 12 months, about $5,400. You've got your maintenance and repairs, right? These are the things that happen in your home or in your vehicle. Hopefully it's less. Sometimes it can be more than $2,000 a year. We'll talk contingencies in a bit here. Dining out. This is one of those things that I have observed people tend to underestimate and overspend on, okay? we all have the best of intentions of not going out and spending tons of money on, really expensive lattes and nice dinners. The reality is we like expensive lattes and nice dinners, and so if you're going to do it, then put it in your budget, because again, you're trying to determine what the cash flow requirement is for the life that you want to live. Okay, so let's throw $3K in there. Phone, $1,800, so that's about $150 a month there. Entertainment, okay, maybe about $200 a month there for 12 months. This could be anything, like it says here, right? Streaming services, concerts, events you might want to go to. Travel and vacations, this might be for anything that's beyond, vacations that you're doing with your family, right? Maybe you like to have a personal getaway or something. Hobbies and interests, right? We talked about golf earlier, maybe a couple rounds of golf there too. Personal clothing, right? Now, this can be wildly different for different people, right? I'm a lot less picky about my clothing. Maybe, I could probably improve in that area sometimes. So for me, in my mind, I'm thinking, hey, $500 probably fine. Some people probably like $500. That's like way too little for what I like to spend on clothing in a year. Put something down that you want to have there, right? And then finance, right? You've got emergency fund savings. So a good goal to aim for is have about 3 to 6 months of expenses that you have set aside in cash, that you can even just keep in a GIC or something if you're in Canada here, so it's capital protected, but you're still making some interest on it, right? Just keep it squirreled away, and then that way you've got some cash in case things come up, right? So perhaps if you don't have that, you can start making a plan for that by just squirreling away $1,000 a month over the next number of months or years. Probably a few, it might take even 2 years to get up to the level where you want to be as far as having some of that cash just sitting around in an account should you need it, okay? Investment contributions, okay, if you want to be making investments, then, setting aside a monthly amount for that. Insurance, right? So various insurance that we're going to have. This might actually be quite low if you're thinking things like life insurance, perhaps even vehicle insurance if you're not parking, no pun intended, parking your vehicle insurance costs up there, right? So you just want to make sure you're capturing this stuff, okay? This is the thing about budgeting. Sometimes it's like, does it go here? Does it go here? It really does depend, just as long as you're making sure you capture it, okay? And then lastly, unexpected contingencies. It's always good to have a plan for a bit of extra that you might need even in a given month. So maybe $1,000 buffer there. So for the total there, you're looking at a monthly equivalent of about $9,992, about $10,000 a month of cash requirement, or $119,900 for the year. Okay, so that's your cash flow requirement to fund this life. Okay, the goals that you've laid out here is actually relatively modest for the average business owner. Okay, this isn't living lavishly, I would say. We have clients of all types, and this I would say would be fairly modest for a business owner, right? I mean, if you're not able to aim for targets like this as a business owner, then there might be some things you need to focus on in your business in order to get you there. Okay, and that's what we're going to actually look at some of those things next here. Okay, so we're looking at $119,900. So let's hop over to this tab here, the non-business income, because you've got your business income, yes, but you also might have other sources of income, right? And so just to kind of plug some numbers in, I put maybe $3,000 a year for dividends on investments that you might have, maybe $1,000 a year from interest that you might be getting from some cash deposits that you have, pardon me. And then maybe you have a rental property, right? That's generating net maybe $800 a month, and so that's about $9,600 a year. So then that's going to generate $13,600 of cash for you, okay, or $1,100 a month, which will help reduce what your business needs to generate in order to achieve your personal goals that you have listed out over here. Okay, now that you've established what your personal goals are and what your non-business income is, now we hop over to the summary tab here at the bottom, okay? And I know this looks a little bit spreadsheety, okay, so we're going to walk through this line by line so it's not so overwhelming. For those of you who are a bit more familiar with working in Excel, it's maybe not as crazy, but we'll go through this line by line. And as we go through this, you should feel a bit more comfortable with what each of the lines mean and what information you need to put in here, okay? So step one, we want to look at our personal cash flow requirement. Okay, so annual personal cash requirements, $119,900. That's what we've established from your goals. Then the annual non-business income after tax is $13,600. Okay, so that's taken from the non-business income account. Quick little note there are estimated taxes on this. So if you have tax withheld from things like your dividends or interest income, then put that in the column there just because it does help adjust that. Okay, so your cash gap then. What's the cash gap? Your cash gap is essentially the cash that you are going to need in your personal life in order to fund your personal goals here. Okay, these are your personal goals that you've outlined in terms of what you want to be paid towards to make happen, right? And so the cash gap is the $106,300 after accounting for your non-business income. So then the next question is, what does your business need to do in order to cover that cash gap? Okay, that's what we're going to focus on next. So step 2 is your business profit demand. We're going to dive into that here. The first step in that is taxes, because if we don't account for taxes, then our estimate could actually be off by quite a bit, right? Because taxes, unfortunately, are a pretty big part of our lives' expenses and cash flow, and so we do need to account for that. So let's just put some hypotheticals in here. Okay, so corporate tax rate, I just kind of plugged in what we have for our jurisdictional corporate tax rate is 11%. And personal taxes, I intentionally put personal tax rates for dividends and salary that I know are not going to be exactly correct. And that's because I know that some of you are like nerds, like I am, and you're going to actually calculate it out specifically and be like, well, that's not right, right? And so I know. So I intentionally put an amount in here that's actually not going to be correct, but it's like ballparky, okay? So what I would suggest when you're working through this section with the taxes, know what your corporate tax rate is, and then look at what your corporate tax rate is on salary and on dividends. The dividends here is a little bit less than the salary amount, just because in our jurisdiction, we have a dividend tax credit that's tied to the dividend, which helps reduce the effective personal tax rate at the end of the day on dividends. So that's a little bit lower, but if it's the same, then just put the same as your salary tax rate. If you don't know what that is, talk to your accountant and just get what those amounts are. You could put 0 in there, but then the following analysis is going to be a little bit rougher. Okay, we want to try to get this as close to actual as possible. All right. So now that we've put in our tax rate estimates here, let's dive into your compensation, okay? So let's say you need to have $106,300 in hand. Let's say you take a salary of $80,000 out of your company on an ongoing basis, with the rest being dividends, okay? So if you take $80,000 out, that means after tax, at your 25% personal tax rate on salary, you will have a remaining cash gap of $46,300, okay? Because you'd be getting $60,000 after taxes from your $80,000, so you still have $46,300 that needs to be fulfilled in order to meet your cash gap. So that's going to be through dividends, okay? And the dividends that are required based on your dividend personal tax rate of 17% here will be $55,783, right? Because if you get paid dividends of that, then you pay your 17% tax, then that means you'll have enough in hand to fund that cash gap. So total compensation from the business, $135,783, okay? Maybe you want to take a $100,000 salary, right? And then that will reduce what your dividend requirement is over here. This is not meant to be a tool to determine the best split between salary and dividends, okay? This is a rough calculation tool. Depending on the jurisdiction that you are in, there's going to be specific things that need to be looked at, okay? This is a rough summary as far as that goes. So don't use this as a tool to determine the best split between salary and dividends. Okay, so now you know that. Your total owner compensation for the business is going to be $137,711. Now, you may have some other things, some other goals in your business that you might just want to throw into this analysis, okay? What do I mean by that? So maybe you want to increase the cash reserves in your business, okay? Good recommended benchmark, if you're looking for one, is to try to have cash in your bank, so operating cash available, of about 10% of your revenues, okay? Now this does depend a little bit on the industry of your business, but we typically calculate this using something called a cash conversion cycle, and that's how we'll get to about 10%. So it tends to be about 10-15%. So, we're not going to get into the specifics on that here, but let's just generally say that. So maybe your goal is to pump up your cash reserves another $35,000, and then maybe you want to add another $5,000 of profit just to maybe you have to buy some computers, for example. Okay. So based on that, okay, you're going to have some additional profit here for the dividends that you need. You're going to have some cash reserve increase and company reinvestment amount. That's all going to be profit, right? In the business, that's either going to be distributed or reallocated for cash reserves or reinvestment, which means your total amount of profit after your owner's salary in the business is going to be $87,316, which accounts for the corporate taxes that you will also be paying on the dividends that you're going to be paying yourself out, as well as cash reserves and the company reinvestment, right? Because that's all going to be profit. You're going to be taxed on that with your corporate tax rate that you determined up here. So that's calculated down here. And so your net profit required is going to, in this case, be $87,316. So if you subtract the corporate taxes of $96,005, that will then give you the availability for your company reinvestment amount, your cash reserves, and then your dividend, your pre-tax dividend amount, okay? All right, so that's your net profit that you're aiming for. That's the bottom line of your income statement, right? So now let's reverse engineer your business based on that, okay? So let's start with overhead. So overhead expenses are going to be any expenses in your business to help support your business but aren't directly tied to the provision of your products or services, okay? So for example, classic overhead expenses, insurance, right? The rent of your premises, maybe vehicle expenses, accounting, legal, maybe you have some admin staff, right? So those are the types of expenses that will be in your overhead. And so $100,000, not a crazy amount, so it's a smaller business here for sure. And then we're also going to be including your owner salary in here. This is just automatically calculated, okay? Don't plug that into this value because that's already accounted for here, okay? But it is going to be part of the overhead. And so what we're trying to back calculate next here is this next green line here, okay, which is your gross profit required. Now, gross profit, what is that? Gross profit is the profit that your business keeps after making the sales and paying for your cost of sales. So what are costs of sales? Costs of sales, say if you're a contractor, are going to be things like your materials, direct labor, subcontractors maybe that you're paying for. If you're selling a product specifically, it's going to be the hard cost tied to that product that you're selling, right? If you're selling shoes, it's always my classic example. I know it's lame, but if you're selling shoes, right, it's your cost of the shoes that you are selling to your customers, right? So after you sell your products or services, you are left with something called your gross profit, which is a profit after you've done sold your products or services, paid for the costs involved. That profit is then available to cover your overhead expenses and your desired net income. All right. So that is calculated to be $287,316, right? Because if you take that and then you subtract out your owner salary and your overhead expenses, that then leaves you with the $87,316 in order to cover your company reinvestment, cash reserves, and dividends required to fill your cash gap here. Okay, so that's the net profit, or the gross profit rather, that we're looking for. So now we need to back calculate what your revenue is. Okay, what revenue do you need to aim for in order to achieve that gross profit? So then we use something called your gross margin. Your gross margin is calculated by taking your gross profit and dividing it by your revenue. Okay, best way to sort of think about what gross margin is it's the amount of money that you have available for every dollar of revenue that you earn. So for example, if in this case, if we're going to use a 40% gross margin amount, that means when you sell $1 of products or services, you are keeping 40 cents in order to pay for your overages and contribute to your bottom line net income. So in this case, we're going to use 40%, and so that then back calculates the revenue that we need in order to generate that gross profit. Okay, so if we multiply $718,289 by 40%, that gives us gross profit of $287,316. So this is a revenue that we need to generate at a 40% gross margin to get gross profit of $287,316. Okay, then that covers our overhead, our salary, and then the net profit required to cover our company reinvestment, cash reserves, and the dividends that we need to take in order to pay taxes and have cash in hand at the end of the day to fund the $106,300, okay? I know it kind of feels like we're probably doing the 12 days of Christmas as far as like counting back all the time, but I really want to help you understand, sorry, I just hit my mic there. Really want to help you understand the direct connection between your revenue, your gross margin, getting you to your gross profit, and what it is that you need to generate in order to meet the cash requirements, in order to meet and achieve your personal goals, okay? So total revenue needed, $718,289. Now we're going to look at any existing revenue that might be on the books, right? So if we look at maybe a contracting business, quite often they'll have some projects already lined up, right? Maybe the nature of your business is such that you have clients that come to you every year, and so maybe you have recurring revenue that way. So in this example, we're just going to use $400,000. And so if we have $400,000 already on the books, that means new sales that are needed in order to generate the $718,289 of revenue. It's going to be $318,289. Okay, that's the new revenue that's needed to be generated in the year in order to hit that revenue target. Okay, so the next thing we need to look at is the average dollar per sale. Now this can be a little bit of a tricky one, right? It depends on, again, on the nature of your business. If you have a big range of products or services that you offer, I would just pick an average amount that more accurately represents the bulk of what it is that you're providing, okay? If you have just kind of a couple of offerings, then that makes it a whole lot easier, of course. In this case, we'll just say it's about $5,000 for the year. So again, this is for the year, right? So if you have clients that kind of pay you throughout the course of the year, it's the total amount of that, right? So maybe you do sell a product of some kind, and when customers come to your store, they're usually dropping a few $100 here and there. That can tally up to $5,000 pretty quick over the course of a year, right? So think about that in terms of the year. So once we know what the average amount is, then that helps back calculate the number of sales that are needed. Okay, so that's 63.7. In this case, we're going to just round up just to have whole numbers. Okay, so 63.7, so 64 sales per year of new sales that are going to be required in order to add on to the existing revenue to get to our total revenue of $718,289. Okay, now what we need to do is look at our closing rate. Okay, so what's the closing rate? So when you have people who come into your place of business and you do a sales presentation or you create a proposal or whatever it is, what is the close rate? That's the percentage of those people that end up becoming paying customers, okay? So in this case, we're going to use the example of 80%. So 80% of the people who received a proposal or presentation decide to become paying customers. And so as a result of that, we know that we need to now generate about 80 proposals in the year in order to close 63.7 or 64 new sales, right? Add an average sale value of $5,000 in order to generate another $318,000 of revenue, which adds on to our $400,000 to give us total revenue of $718,289, which at a 40% gross margin gives us gross profit of $287,316, which then covers our overhead and salary, again, owner salary of $200,000, which then leaves you with the $87,316, which helps cover your corporate taxes, then your company reinvestment amount, the cash reserves, and the dividends that you need to take in order to, once again, have your cash in hand of $106,300 for the year in order to accomplish your goals. All right, so where were we here? We were looking at number of sales needed, number of proposals. Okay, so you will have qualified customers, qualified prospects. I should probably we'll call it qualified prospects coming into your business, asking for more information. Those people, from that pool of people, you will be providing proposals or sales presentations, right? Not every qualified prospect being somebody who is interested and able to purchase your products or services, right? Not all of them are going to have a sales presentation or a proposal, but let's say 60% of them do, okay? That means you need to have 132 or 133, if you're going to round up, qualified prospects over the course of the year, right? Because if you have 133 of them, if 60% of them you give a proposal to, and 80% of those end up buying from you at an average value of $5,000, that gives you $318,289 of new revenue that adds on to the $400,000 of existing revenue for total revenue of $718,289, which again, pardon me, At a gross margin of 40%, gives you your gross profit of $287,316, which covers your overhead and your owner salary of $200,000 total, leaving you with net profit of $87,316, which covers your corporate tax, company reinvestment, cash reserves, and the dividend that you need to take in order to pay taxes, in order to have cash in hand at the end of the year, or throughout the year really, to fund all of your goals. That will tally up to $106,300. Okay, last little section, okay, is the total leads that are needed. So if you need 133 qualified prospects coming to your place of business, to which you can then, of which 60% will then have a proposal, you need to think about how many of the leads that you generate are actually going to be qualified prospects, okay? So what is a lead? A lead is basically somebody who knows about your business and could potentially buy from you, okay? So generally leads are what result from you doing marketing or outbound sales activity, okay? You're going to generate leads. From that pool of leads, you will have some qualified prospects that reach out to you. From that pool of qualified prospects, you will then do sales presentations or proposals or whatever it might be in order to make your sales, okay? So how many leads do you need? That depends on how many of them are qualified, okay? This gets to where do you do your marketing, how do you do your marketing, who do you reach out to? So let's just pretend that 10% of the leads that are generated for this business are qualified. So 10% of all the leads that you generate will actually reach out and ask about getting a proposal, okay? If that's the case, then the total leads that are needed are going to be 1,327. Okay, you'll need 1,327 leads, and then if you can make your customers or your clients very happy, they'll refer business to you, and then that's less outbound marketing that you need to do, right? Because you're generating business from within your existing pool of clients or customers. So then the leads that are required for marketing might be 1,276 if you're going to be getting 50 referrals perhaps throughout the year. Quite often referrals are going to be a lot more qualified than even say this 10% leads. Okay, so that again, we'll take a step back and so if you have 1,276 leads throughout the course of the year plus 50 referrals, that gives you a total number of leads of 1,326, 27, I guess we want to round up, right? If 10% of those are qualified, that means you will have 2 qualified prospects, right? Now, if you have 60% of those, a proposal, that gives you about 79 or 80 proposals that you'll be generating. If you close 80% of those, right, that means you'll be generating your 63.7 or 64 sales, new sales in the year, which generates your $318,289 of new revenue, which adds to the $400,000 of existing revenue to get your total revenue target of $700,000, gives you your gross profit of $287,316, which covers your overhead and owner salary combined amount of $200,000, leaving you with net profit before tax of $87,316, which allows you to pay your corporate tax of $9,605, which leaves you then with the cash to reinvest $5,000 into those computers you wanted to get, put $35,000 into the bank so you've got some more operating cash available so you're less cash constrained during the course of the year, and it allows you to take those dividends of $37,711 that you need to add to your $75,000 after tax that you already took from your $100,000 salary, pay your 17% tax on that dividend, and your net after tax amount that you will have in your hands would be $106,300 in order to fund your personal goals over here. Okay, so again, the big goal here is determining what your personal goals are, what the cost is for each of those, so you can get a sense of what your total annual cash requirement is, and then translate that into specific goals for your business. Now, I know that was like a whole bunch of stuff, so what do we actually care about? What do we look at on an ongoing basis? That's what step 4 is all about here, okay? So let's look at step 4. Monthly targets. Monthly target revenue, $59,857. Monthly new sales target, so revenue coming from new sales, $26,524, okay? Monthly number of sales, 5.3. That means monthly proposals, 6.6. Okay, monthly qualified prospects, you need about 11 people, qualified prospects coming to your place of business. That means you need to be generating about 110 leads, but again, you have some referrals. So from your marketing, you need to be generating 107 leads per month. Now, when it comes to tracking your metrics, monthly is very, very important. Okay, if you're not doing this at least quarterly, start doing this quarterly. Okay, at a very bare minimum, do this quarterly. I would highly recommend doing this monthly. Okay, because if you do this monthly, it keeps a very regular pulse on how your business is doing so that you can augment as needed. Now, some of these leading indicators, as we call them, okay, so we call them leading indicators because they essentially indicate how you are doing in advance, okay, leading indicators. I would review these weekly if you can, okay. So on a weekly basis, look at your revenue. Did you generate $14,366 in revenue? Did you close 1.3 sales? Okay, so basically 4, right? Did you send out 1.6 or sorry, I said 4. Should be 2. For rounding up here, the accountant totally screwed that one up. When I say that, I'm talking about myself here. Weekly proposals, did you send out 1.6 or 2 of those per week, right? Weekly leads, did you get 26.5 or 27? Now, what I should say is from one week to the next, your actuals will be plus or minus on these numbers, okay? Your goal should be to at least trend toward these, okay? And if you're not doing that, that's going to help you determine if you're going to meet your goals or not. And so, if you're looking at this on a monthly or a weekly basis rather, if you're trending lower, it just helps you think, okay, I got to put my pedal to the metal a little bit more on some lead gen, because maybe my lead generation, sorry, we're using some short-term slang here. So maybe you only had 15 leads and you didn't have any proposals that you sent out and you didn't actually have any sales, right? That might be indicative of the fact that you need to step on the gas a little bit more in terms of your lead generation so that you can have more of those leads that are needed in order to create more proposals or sales presentations in order to close more sales. So definitely, if you can, track this stuff on a weekly basis because it helps you set specific targets for your next week. I think a really, really good practice is on your Friday, at the end of the day, create a list of the things that you have to get done and definitely accomplish the following week, including some of these business development and sales targets, okay? So I hope that was very helpful, okay? And just kind of a quick last note here as it relates to these targets. You don't need it like a complex system to track this. You can just track this in Excel, okay? But have sort of a weekly or monthly tracker just to see how things are going with respect to these particular targets. Because if you're trailing one way or another, it just helps you know what you need to do and what you need to focus on in your business. Because again, if these are the actual numbers, right? If these percentages are in fact correct for your business, then following these targets will get you to the revenue that you need. And if you maintain your gross margin, that will get you to the gross profit that you need, which then will help cover your overhead expenses, getting you to the net profit that you need to pay your taxes, and get you to the in-hand cash after tax that you need as a business owner to cover your cash gap in order to reach the goals that you have listed out over here. Now, just one quick little note as I was talking, I start to get into the weeds here as an accountant, so forgive me on that, but your gross margin, right? This is the profitability of the delivery of your products or your services. And so if you think about it, if you can tweak that a little bit so that there's improvement there, the downstream effect on these targets is quite considerable. So let's just say you find a way to improve efficiency in the delivery of your products or services such that your gross margin goes from 40 to 45, okay? If we change that, okay, it changes what some of these original targets are, okay? Because then you don't actually need as much revenue in order to reach those goals, okay? So let's just go back to 40% here, right? So if we went up to 45% gross margin, all of a sudden we only need 638,000 in revenue instead of the 700 and something. So to optimize your profitability on the delivery of your products or services, because that will also really help in achieving these goals, okay? All right, so that pretty much wraps up the walkthrough of this, okay? So again, the big story of this entire thing is it allows you to track very specific metrics that tie back to what you need in terms of the number of leads, from whom you will have a percentage that are qualified, from whom you will actually be able to provide a sales presentation or proposal to, from whom you'll have a certain percentage that actually become closed sales. And so at a certain percent or a certain amount per sale will give you the new sales and new revenue that's needed to be added to your existing revenue to hit the total revenue that's required at a certain gross margin to get you the gross profit that's required to cover your overhead expenses plus the salary that you need to take out of the company in order to get you to net profit that will cover net profit in your corporation, right? That will cover your corporate taxes, cover any additional profitability that you need in the business for, say, reinvestment or cash reserves in order to be able to generate the additional cash required to take out as dividends so that you can pay the tax on it and then keep the leftover to get your total amount that's needed to cover your cash gap in order to reach your goals that you listed out over here, okay? I hope this is a helpful tool for you. This is a very powerful tool that we work with through a number of clients, and I hope it's as powerful for you as well in making that connection between your personal goals and what your business needs to do in order to serve as the vehicle to get to your business goal. I wish you all the best in this as you build your business with intention.